Hi guys, welcome to Ifiok Trades, where we talk about technical analysis not as a tool of prediction but as a tool to help you manage your profits and your losses. And in today's video, we're going to be talking about what do you do when you're already in losses, especially in direct emphasis to the Nigerian stock market, because the whole market has been going pretty down right now. So that's what we're talking about in this video. So if it's something that you're interested in, stick around, stay around, make sure you stay to the very end of this video, because we're going to be talking about what you can do in the markets, especially now that the market is not doing well. But before then, please make sure you're following me on TradingView. Also make sure that you're following me on Twitter, right? And also make sure that you're following me on YouTube, and also like, share, subscribe if you found this video useful. If you did not find this video useful, then please just let me know what you think we could add or subtract. All right, so let's move right straight onto it. For starters, let's look at the all share index. So like I have mentioned in my other videos, I had mentioned that the all share index is like a points-based system. It helps you to monitor the market as a points-based system. So it's from the all share index that you understand whether the market is doing well or is not doing well. So currently the all share index has moved from this top at around 250 or 253,000 all the way down here. So we've had like an over 10% move in losses. We've come all the way down. Now, there's something I want to talk about on the all share index, and it's very important. Now, like it or not, a lot of technical analysis has to do with emotional analysis. That's the whole of it, and there's a lot of psychology. So now, if you check it here, right, we had prices stop here just around 250, right? So what I feel, and I can be wrong, I'm not making a prediction, but just based off of psychology, this is 250, right? It's a psychological placement. After 250, the next psychological placement is 200. And after 200, the next psychological placement is 150. And after 150, the next psychological placement is 100. So I feel worst case scenario, and don't forget, I like to think about the worst case scenario before we think about best case scenario. So worst case scenario, right, we can have prices come all the way here and find support. That's for the all share index around the 200,000 point marker, right? I think that would be fair. I think that would be a healthy market that has gone all the way up, has now withdrawn, is a healthy pullback. That's how markets are supposed to function. So I think it's very important for this pullback to happen, especially close to the 200 EMA. And you know how I love the 200 EMA. Very important. So this is a very likely area. This is another very likely area, because when the market is going up, you don't know how high it can go. And when the market is going down, you don't know how low it can go. So it's always better to prepare for the worst. Okay, having said that, how are you preparing for worst case scenario? Let's first of all start off with STANBIC IBTC. Okay, so currently STANBIC IBTC, we're not sure where it is, and this is exactly what you're supposed to do with technical analysis. You're not sure what's going to happen with the market. Currently, this is where prices is at. You have no idea whether it's going to come down, you don't know, or whether it's going to come up from here. You have no idea. But what can you do? And that's where two sides trading comes in. You have to plan for when it goes up, and you also have to plan for when it comes down. That's when you know that you are a good trader or investor. Okay, so what happens? So at the point where it is at, my guess is that STANBIC IBTC currently at 163 might be in distribution. My guess could be wrong, right? So it could mean that prices can leave where it is right now, 163, and move upwards. That's a fantastic. I hope that that's what happens in the future. But what if that's not what happens in the future? Are you prepared for if it falls? And so if it falls, what's the if at this is the point where you're finding STANBIC IBTC and you were invested much earlier, it's not better to take profits? And that's the whole other point of technical analysis I'm always trying to say. It's for you to take your profit, or to manage it's for you to be able to manage your profits. When you saw your profits, did you take profits? Now that you are in losses, are you going to cut your losses, or are you going to stagger your losses down? So that's what to do when you are in losses. Is either you cut it, completely cut it, especially if you think the fundamentals of the company is not going to hold any water in the future. You cut your losses, you sell it off, and you don't look back. But if you feel that it's going to do better in the future, then you say, okay, fine, how low can it fall? So let's assume I'm right and this is in distribution. I expect it to fall in here. So once it comes in here, we are in decline, right? If it falls from decline into here, then we have entered another zone. For me, I feel like if you are invested in STANBIC IBTC, the best times to buy should be in these pockets. That's what I feel. This area, this is the area to buy. This area, that's the area to buy. My next area to buy, that's the area between 120 and 140, assuming it actually declines. Assuming, right? And worst case, so I could buy a tranche. I could buy tranches here between 120 and 140, and then the next tranche I'll buy will be between 100 and 120. You see, preparation meets decline. That's risk management. So if assuming you bought STANBIC at 100 and you meet it at 160, you are 60% up. Take profits as you wait for it to come down. If it comes down, if it doesn't come down, you took profit at 160 and it continues to go up, then you take profit at the next psychological level, right? That's how to do it. Okay, let's look at another one. Let's look at MTN. Let's get MTN. Okay, so this MTN, like I said, it's possible that MTN is in distribution, but well, my area of, I'll be sure is in distribution if it comes, if this whole area right now is supporting 720, right? Supporting to a 720. But if it doesn't support, if it falls down below 720, then the psychological level that people will be looking at will be 600, right? So that will be an area of decline. Now is left to you. Do you want to buy in that place of decline, or you want to wait for it to even go even lower? These things also take months and sometimes weeks and sometimes even years to play out. This whole movement of MTN moving from 170 all the way up to almost 900, it didn't happen in 2 months. It happened in 2 years. So this is exactly what happens with the markets. It's a lot of waiting and a lot of patience, but you also have to do a lot of planning. And so with MTN, if you got into MTN when it was much lower, did you take profits? If you didn't take profit, what's your next plan? Your next plan should be, if you're not going to take profit right now, okay, I'm ready to stagger my buys lower, assuming it goes lower. If it doesn't go lower and then it continues to go higher, then okay, I'm already in position. Then I'll now decide, okay, maybe I'll, at a good psychological level of 1,000, that's when I'll sell, right? That's what to do with positions. If you entered at a good price, take your profits. If you are not sure what the market is doing and you feel like it's a bearish activity, then take your profit and wait for it to go lower so that you can buy lower. All right, so let's look at just one more. So this is ARADEL. And ARADEL typically has left the area of distribution, which was right here. It has left distribution. This whole area was in distribution, and currently it has declined, and its decline has even gotten down very close to the 200. So for me, ARADEL is currently at a very fantastic area of interest. If I was going to buy, we buy ARADEL. This movement from this is a loss of over 35%. So I think that if you sold your ARADEL at 200, this is a very good fantastic buy area. If you bought at 200, then it's either you cut your losses or you continue to stagger your buy downwards. That's what to do. If you think that the company has an opportunity to do well in the future, then you stagger your buy downwards. But if you didn't buy at a good price, then unfortunately you stagger you cut your losses and know that you are done with that. Okay, so I just also want to balance what we have talked about. So with ARADEL, Fintech Pro has told me also that the debt to equity ratio for ARADEL currently is not looking good. It's not looking good. Same thing I also noticed for MTN. Let's see. So MTN here, we just ask it to run the AI analysis, and it takes a little bit of time, but basically we just give this time. I'll come back to it with your risk. Also, okay, so this is, it has opened up and is also mentioning that MTN also has a very high equity liability to equity ratio. So basically it has more liabilities than it has equity. So that's, you need to for me, I don't think I'll be investing in MTN for a while. I'll just wait for it to see what happens with the markets. Also the same thing with ARADEL. Same thing, it's also saying that the liability to equity ratio is pretty high. So we'll wait and see what happens in the future. This is all I have for you. I hope this was helpful. If it wasn't helpful, please let me know. But I feel it's two things. If you're in losses, it's either you cut your losses and look away, or you say this is a very fantastic company, I'll wait for it to drop lower and then buy lower. Or if you're sure that it's going to even go higher, then you hold your position and wait for it to continue to go higher. All right, so that's what I have for you in today's video. I hope that was helpful. If it wasn't helpful, let me know. If it was helpful, also let me know. I'll see you in my very next video. Bye.